Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the euro currency. So here you can see that markets still have made some minor bounce on the background of the ADP report. So it seems that market right now is just trying to catch any news to get some at least minor relief on this absolutely stunning and disturbing performance, not only on the forex market but on the bond market, everywhere. So investors start really worrying about this, and they are just trying to catch at least something that could tell him that probably all stands around not as bad as it really shows on the charts. And as you can see, once we get slightly lower ADP report, investors immediately is trying to just use it to for the balance, suggesting that maybe Fed will change their mind, maybe we will not get any rate change. But they are But now, guys, we should understand that the current problems with the performance of the debt, it's not just in assessment of the market or investors, what the Fed will do or they will not do. The problem is stands in the amount of the supply of this debt. So we just posted in Telegram, you probably saw that just in 1 week we've got a jump in the debt for 275 billions. So this is outstanding amount of the debt that we're not even speaking about the solvency of the country. We are just speaking about the amount of the supply that is coming on the markets. Here you will also have to add the selling by the Japan, who trying to support their own currency, and the massive selling by the Arabic countries, who just diminished gradually, decreasing the amount that investments in the United States bonds, and of course the China. So all this big flow is coming to upon the shoulders of the households, who are the major buyers currently, and it lies in the United States. And actually it's not really too much rest. It's mostly European Union, Mexico, and some other countries, because as you can understand, China and Japan was already out. So, and just this push yields higher. So you can see what we have currently on the 10-year yield. I have shown you it here. As you can see, minor pullback has happened. Technically, it's just because of the result, but in fact, by the report, and that's investors just trying to grab and hold anything that could tell him that something stands not as bad. So, and you can see reaction stands. So what we could do on the euro currency, here as you can see minor bounce, and here is grabbers forming. So I do not see here with any changes of our major tendencies, major context. It's just minor pullback, mostly by external factor. And today we could get the grabber. If we will get the grabber, we just could say that probably market will keep going lower, taking out of these lows, and keep going to our target that we have. This absolutely is the same level. It's 104 area that we discussed yesterday. On the 4-hour time frame chart, it seems that here we have a kind of the bread and butter setup. It's because within the two candles we are standing right now at the fib level. It's 108.20. But we should understand that we're coming to the payrolls report. And what will happen here, how market will react on the possibly lower numbers of the payrolls, it's difficult to say. That's why maybe it makes sense to wait for a confirmation of the grabber and see what will happen, or at least control the risk if you would like to take the position. So it would be probably initially to place it somewhere above the zero, just to not risk too much in case if market will jump tomorrow on the payrolls report, if they will be weaker than expected. On the hourly chart, we have some patterns that theoretically could justify the entry right now. So we have the pullback at 30% of the butterflies. We usually talked about this, as you can see from the 127 target. So minor pullback has happened. Here we've got minor got steeple to sell and start working. So from that standpoint, and with a potential grabber in place, so we do not know whether we'll get it by today close or not, but at least how it looks right now, and with relatively small risk, just above this area, so it will be around 30 pips risk. Well, theoretically, you could try to, well, if you would like to take the short position, that's at least more or less reasonable, so you do not risk too much. And if we will be right and market needs to start falling, we will get the grabber, everything will be just great. Other approach, as I said, is to wait and see what will happen. So to get the confirmed grabber and well, actually be aware of the payrolls report and see what will happen. Those of you who do not want to risk and hold them from the through the payroll report, it would be better to do nothing. It's just to wait and see what will happen and make the decision on the next week, because the performance tomorrow will be probably very nervous. It's just because investors are really shocked by the recent performance, especially on yields, and they will be a bit overreacting on the numbers that they could get. So volatility might be really more significant than usual. From that standpoint of view, maybe if you're a conservative trader, maybe it makes sense just to stay aside for some time and just see what will happen.